In today's video, we're going to talk about the TTM Squeeze Setup. When is the best time to trade the squeeze? That's the question I get all the time. When is the best time to trade the squeeze? We're going to talk about that. All right. Hey, so if that sounds good, do me a favor. One, hey, hit the thumbs up button. It doesn't cost you anything. Helps support the channel. And if you like this video content, hey, make sure to, number one, watch it all the way to the end, and then give me a nice comment. And guys, stick around to the end because I've got a link that I'm going to share with you on how you can get my new book, Trading Part-Time, completely for free. All right, let's go ahead and jump into today's video lesson. Discussing market posture, we always look for our intermediate term posture first, right? Is the blue above the pink, which is the 8 exponential above the 34. A very easy way to determine your intermediate term trend is the blue stacked above the pink. Moving averages are trending indicators, hence the word, and again, trending. They're only valuable when they are either trending up or trending down. When they start to go flat, they're no longer valuable. And lots of traders, what they'll do when the market goes flat is they'll just remove the indicators altogether. Okay, so look at the S&P 500. One of the things I want to talk about is on market posture, we're going to dive into short term. Short term is critical. Now, I'm not discussing day trading. Okay, so if you're short term trading and you're day trading, different animal all by itself. Okay, I'm talking more about right this moment in this video on the daily time frame. Okay, when I learned how to trade, that's the time frame that I learned how to trade on. It fit my lifestyle beautifully, and I made consistent income along with my mentors who traded the daily time frame. Now, one of the things that we were talking about when we're talking about short-term posture is the hardest one to get, right? We talk about highs and lows. And if you see here, these green boxes, they represent highs and lows. So you got to know how to determine what is a high. A high is a close below the low of the high day. So assuming that that's the close right there, it closed below the low of the high day, right? Now we add an extra caveat to that, is it closed below the low of the high day or any inside / following day, right? That bearish harami, that inside bar. I mean, look at this harami right there. Okay, you see this bearish harami. Yes, the body is inside the body, but it did not close below the low of the high day. So, because of that, we have not drawn a box. Now, we've already got a low, so the next progression is a high. So now, look where we're at in the S&P 500, and we're about to fire. We're breaking resistance. We still are climbing to the upside. The lows are getting higher, and the highs are getting higher, except this little pennant that we got, right? A pennant, right? For those of you that know technical analysis, you know that we got us a little beautiful inside bar / pennant, boom, and it resumed to the upside. Until we close below the low of the high day, which right now, that's the high day because this candle has not closed. We will, the short term, as Dave Johnson would say, the 3-day short term is up. Now, my short-term posture, whenever we get anything other than higher highs and higher lows, it shifts to neutral. But because we're breaking high, I'm now neutral to bullish. And I will be full-blown bullish once we pull back and bounce, but neutral to bullish. Okay, that's my short-term posture. So what if you're going to trade the daily time frame? And that's why I stress the word daily time frame. This stuff is the game changer. Okay, short term's different animal, but the daily time frame, this is the key. And I know because all my mentors pretty much focused on the daily time frame, and some of them made more money than I mean, than I can ever imagine. Okay. So let's now go into a discussion that I, want to build upon this. Again, one of the things that I like to talk about are the same concepts over and over again, but I feel that maybe I'll deliver this message in a way that if some of you are kind of struggling, or at least you don't get it, you might say, oh my gosh, now I get it, right? Dave Johnson calls it a BGO, blinding glimpse of the obvious. So let's make this obvious. So one of the things that, again, I go back constantly and I think about when I did the best and when I did not. I'm always reviewing my notes. I've got, 10 to 11,000 pages of notes. And I'm always reviewing my notes. And I'm just looking back. And every time that I would take class, I would write the teacher at the top, like Scott Thompson, Dave Johnson, Dave Settle, Blake Young, Mike Follett, right? Tom Sosnoff. And what I would do is I would categorize my notes based on them. So as I was going through them, I would be putting a pile of Scott Thompson's, it's got, Dave Johnson and stuff like that. So I was reviewing my notes with Dave Johnson. Okay, last night, I was just going through them. I like to go through them periodically because we're always learning, as Rafa always so eloquently puts. So one of the things that I'm always trying to do is give myself an advantage, right? And going back through my notes, and it's interesting because, as I was writing the notes, I would highlight stuff and I would put important, I would draw stars, I would draw arrows, and just going through about 50 pages last night, just kind of skimming through 50 pages just to look for the ones that I wrote important. Just kind of flip it. Oh, important. Okay. Flip. Oh, important. There was kind of a common theme on some of them, and it had to do with, again, and Dave Johnson taught this so much, and I don't know if I paid attention to it as much as I am trying to get everybody to pay attention to it now, was align your strategy with market posture. And again, let's talk about daily, okay? Not talking about day trading. I always have to go back to that. It's a different animal. Daily, okay? I've made a lot of money on the daily time frames. A lot of money. And I know you can make a living because even though I had a full-time job, the amount of money that I was making consistently not consistently, I sucked for a long time, but once I figured it out, trading was more than what a lot of people will make working their full-time jobs for a year, and that's pretty, that's like easy, okay? A lot of more money than they were making. And I was just doing it in like an hour to 2 hours a day. But this theme right here, so we always want to ask ourselves, what is the broad market doing? And then we trade based on what it's doing. For example, the broad market right now is at resistance. It's at resistance. So we got to think. Since the market is at resistance, we need to align our strategy with what the market's doing. So right now, when I look at this, I think to myself, okay, the market can break out and run for a couple days. Okay? Could break out 2 to 3 days, pull back. So if, and the key word is if it breaks out, we expect a couple more days of positive momentum, and then we pull back into a bull flag. So if it breaks out and we're expecting just for a couple days, that's when the bullish ATR plan would work out well. We look for stronger sectors, or at least coincidence sectors, and then we would trade bull flag pullbacks ATR. Because if the momentum continues for a couple days, we're golden, right? We don't want to be trading the ATR plan when the market is, still a ways from resistance, right? Because again, it could just go up for 1 day, not away, but like a day or so away from resistance, because it could go up 1 day and roll over. And if that happens, I'm telling you, 60 to 70 to maybe 80% of your ATR trades are going to lose. if the market breaks out and we enter a bunch of ATR trades and it rolls over after 1 day, we're going to lose. Let me repeat that. If the market breaks out and goes up 1 day and then rolls over and we enter a bunch of ATR trades today, we're going to lose the majority of them. Now, we have a better chance if we're trading, at least coincidence stocks or leading stocks in leading sectors. And again, remember, daily. We're digesting the daily time frame. This is the key to your trading, the daily time frame. Whether you accept it or not, this is the golden ticket. Now, what else? What else? If the market breaks out, then or again, it's right of resistance, we should be looking for breakout trades. Breakout trades in stronger sectors. So what I'm going to do is I'm going to go through the sector watch list, and I'm going to look for sectors that are already broken out. And then I'm going to go to the top 10 holdings, and I'm going to try to see if I can find an ATR trade or a breakout trade. Because if the market breaks out and this sector's already broke out, there's a higher probability that that stock's going to break out. Okay? Another thing I want to look for when the market's at resistance, and again, I'm aligning my strategy and I'm focused. I'm like narrowed in on what I trade. So that way I don't have to be, again, thinking about, oh, do I trade a green to black? Oh, do I trade a 5-dot squeeze? No. This is what I'm looking for right now. Okay? Now, the market has been going up. So another thing, when the market is in an uptrend, the pullbacks, sometimes they might only be 1 to 2 days. All right? So it might pull back. It might pull back here for 1 to 2 days and then resume its trend, maybe form like an ascending or, a mini cup and handle, right? And then go. So this move right here is not much. So this is where an ATR trade to the downside, looking for bear flags in weak sectors. All right, everybody, I hope you're enjoying today's video so far. Hey, do me a favor. If you are and you haven't done so yet, give me a thumbs up on the video. I really appreciate it. It doesn't cost you anything. It helps support the channel. Hey, and make a nice comment if you are enjoying today's video. All right, so let's go ahead and get back into the video lesson. In weak stocks. So that way, if it does roll over, 1 or 2 days is all we need. Just clean it up. So that is what I'm looking for right now. That's it. That's it. Am I looking for green to blacks? No, I'm not looking for green to blacks. I'm not even going to pull up a watch list of green to blacks. Why? Because green to blacks work best when the market's pulling back into a flag. That's what we're looking for. So when the market rolls over down here, that's when we go search for green to blacks. 5-dot squeezes. Am I looking for 5-dot squeezes right now? No, I'm not. Why? Well, the market's at resistance. I'm going to look for 5-dot squeezes when the market pulls back to support. When the market is at support, like in the bigger time frame, that's when I'm going to look for these 5-dot squeezes, these green to blacks. Because if the market bounces, we're going to win probably 70, 80 to 90% of those. If I go enter a bunch of green to blacks now, listen, I do have probabilities on my side if I do vertical spreads, which is fine. But if the market pulls back like it did here, I had a nice drawdown. I entered a bunch of spread trades at the perfect time. But the market wasn't ready to go up. So what I did was I suffered a nice fat drawdown. But because it was a probability trade, I was able to stomach it. Now, I know traders that entered a bunch of spread trades, and as the market went down, they closed out those trades for losses. And had they followed their plan, as Charles says, trade the plan, focus on the plan, they would have been just fine. But I know people who closed out the trade for losses, and now they're shooting themselves in the foot because they're like, dang it, are you serious? So again, aligning the appropriate strategy with where the market is at. It's so important. If I go put on a bunch of green and black trades now, and this does roll over, I'm going to take some more heat. Doesn't mean I'm not going to win those trades, because we're going into it with probabilities anyway. But I don't like taking heat. I'll deal with it, but I don't like to. So right now, my words of wisdoms are the market's at resistance. What I'm looking for is breakout trades, leading stocks and leading sectors. ATR trades, leading stocks and leading sectors. ATR bearish trades, lagging stocks and lagging sectors. Okay? And if you want to know more about how to trade those strategies, well, then take a look inside of our university and join us in our live coaching. All right, everybody. Hey, thanks so much. Hopefully you enjoyed that video lesson. Watch that. My recommendation to you is watch it over and over and over and over again. Even if you think it's sinking in, you watch it again. Because I can promise you this. You're going to look at your trading a year from now. For those of the people that are still in the business, they're going to realize this was the ticket. Because I didn't pay attention to this for the longest time. And my mentor, who's probably a better trader than I could ever even imagine myself being, every day he did the same thing. And we were all like, oh, dude, again. He didn't care. You know why? His job was simple. He loved to teach. He would always tell us that his mission was to teach people how to trade the market, not the news, and have them understand what really matters. All right, everybody. Thanks for joining, and we'll see you in the next training video lesson. All right, everybody. I hope you enjoyed that video lesson. Man, it is so important to understand the correlations between market posture, support and resistance, and what strategies you put on and what strategies you stop. All right, everybody. Hopefully you enjoyed today's video lesson. And if you did enjoy the lesson, do me a favor. Hit the like button below, share it with your friends, and subscribe to the channel. Oh, and by the way, check down below in the description. There's a link on how you can get my latest book, Trading Part-Time, completely for free. Don't forget to take a look at my next video coming up right there. We know you'll enjoy it. All right, everybody. We'll see you in the next video lesson.